Hello, good morning, ladies and gentlemen. We would like to thank you for attending this webinar on our BL European Small and Mid-Cap Fund. This fund, managed by Tom Michels, invests in small and mid-cap European companies and applies BLI's investment approach that focuses on the generation of attractive long-term risk-adjusted returns. The strategy is benchmark agnostic, conviction-based, and aims to quality company benefiting from solid competitive advantages and a strong capacity of free cash flow generation. On a year-to-date basis, at the end of September, in challenging market environment, the fund has generated a return of nearly 18%, while the MSCI Europe's mid-cap net return appreciated by approximately 16%. Before starting, I would like to give you a few data on Banque de Luxembourg investments. BLI is the asset management arm of Banque de Luxembourg. We manage approximately 50 billion and a half euros, of which 45% are invested in pure equity strategy. Please feel free to ask questions in written using the chat system. We will try to answer them just after the presentation. A summary of the call will be published in the coming days, both in English and in French. And now, I leave the floor to Tom Michels, the fund manager of BL European Small and Mid Caps, who will give you an update on his strategy and the portfolio.
Yes, thank you very much, Françoise. Good morning, everyone. Thanks for joining this call. As François already said, I will now give a small update about the fund. I propose that the structure of the presentation will be as follows: small overview of our investment approach and philosophy. Then I will give you a short update on the markets, on the portfolio, and on the performance that we have seen over the year since the beginning of January. So then let me just share my presentation with you, so we are on the same page every time. Okay, so let's start. What is our investment approach? So what's the investment case of the BL European Small and Mid Caps Fund? Well, investing in this asset class allows you to invest in entrepreneurial companies, so companies which are more dynamic, which have a clear focus on one product. You have a positive dynamic in this asset class as the companies tend to be more in a growing phase, so you have like growing sales and the possibility of better margin in the future because of economies of scale. And as already said, you profit during the growth phase of the companies. What are the interesting characteristics of such companies for investors? Often these companies are focused on one specific know-how, so they have high technological know-how. They are often focused on niche products, so they have no direct competition from bigger ones or for small competitors. They have a strong focus on the business and flexible structure, so there are no big hierarchies that they have to respect, that they have to follow. So there's not one regional bureau that has to decide, and then is the national bureau, and then the bureau of the whole conglomerate, which is based in another continent, for example. But it's really the strong focus on the business, and that's what's count for the companies. But nevertheless, even if they are small and mid-cap companies in Europe, they still have an international expertise. Just to give you an example, roughly 50% of the sales generated by the companies in the fund are generated outside of Europe. Okay, maybe just a very small overview. What's our investment approach on investing in companies? Our business-like investment approach selects quality companies for the long term. We are not doing trading, and we have convictions, and we base our portfolio on these convictions on the long term. So what are the companies that we are looking for? What is this business-like investing looking for? Well, we always say we're perceiving business like long-term owners. So we invest in the company in order to be on their side over the long term, to profit from their dynamics. And how do we choose these companies? Well, we are looking for transparent and clear business models. That we have to understand how the company works, how they are doing their money, who are the clients, who are the competitors, who are the customers, who are the suppliers. So we really have to understand how the business works. Then we are looking for sustainable competitive advantages. So is the company doing it better than any competitor? What is the reason why they are doing better? and is this competitive advantage sustainable over the time? Then we are looking, of course, for high profitability and for profitability growth. So we really want that the company grows and that profitability goes up, so that also the benefit of the company can outgrow the growth of the sales. And then we stay disciplined on valuation. If valuation got too expensive, of course, we will sell the investment. Okay, this slide is for you, so you can see a small overview of the fundamental analysis that I just approached in the slide before. On the right side, you see our spider web, the 5 different categories of competitive advantage we are looking for. So at least one of these competitive advantage has to be very strong. Then we are looking the quantitative evidence that this competitive advantage is really benefiting to the company. So we're looking for economic profit levels like ROCE or return on equity and operating margins. Afterwards, we're looking at other fundamental measures like the balance sheet strength, capital intensity, and quality of management. That said, it's not that we are judging of the capacity of a CEO or CFO, but we are really looking if management said 5 years ago that our strategy over the next 5 years will be to expand more into Asian markets, and they did it over the last 5 years. We can see that when management says something, that they're really doing it. So it's really to understand if the management that we can count on the management. Yeah, of course, we're also screening the ESG profile of the companies. We are looking at free cash flow generation in order to do our valuation afterwards, and we're also looking at the secular growth drivers of the company. So is the industry where the company is active in a growing phase, or is it declining phase? Of course, we have to pay attention, and we're looking at the innovation capacity of the company. Okay, so what happened on the market since beginning of the year? I think market have been split into 3, if I can say it like that. At the beginning of the year, we have seen the markets getting more enthusiastic about vaccine company, the vaccine rollout in different countries. Reopenings have started. Everybody was euphoric to get back to normal life again. So the companies that were more behind over the last year, when we were living in lockdowns and shutdowns and everything, they gained a lot of traction at the beginning of the year. So it was more difficult for us because these companies like the more value plays, and as we are looking more for quality growth, of course these companies were not present in our portfolio, and so we had more problems to follow these trends. Then we saw that the rollout of the vaccination was more slow than anticipated, and more lockdowns had come through in March, April. So therefore, this euphoria was a little bit was less important then, and our quality bias helped us to outperform the market again. And now with people going more and more out again, with more and more evidence that vaccination works and that governments will not shut down in the same way again. Let's touch some wood that it's effectively like that. The value plays came out again. And then, of course, there was now in September a new addition coming to the market, was the rise in inflation, where the market observers are still not very sure if it's a temporary phase or more sustainable level of inflation coming through, with higher energy prices, with supply issues coming through. The consensus tends to think that inflation will stay a little bit longer, but these are more macro data, which is not my best experience field. So yeah, that's the floor to more experienced people in this field. So therefore, now for the last month, it was more difficult for us again, because with high energy prices, of course, oil prices went up, and all the energy sectors stocks had a nice rebound. As you can see on the right side of the graph, you see this light blue, not light blue, but mid blue color. This the MSCI Energy Index in Europe, which had a strong rebound with Brent prices going through the roof, and we have seen then technology companies coming down, and with higher inflation, rates went up also. So the financial index, which is in yellow, which is in gray, had also quite a spike in September. So again, sectors which are underrepresented in our funds so therefore it was more difficult for us to perform over this period. And then maybe just a small word on the market capitalizations, how markets have performed. You can see that mid cap and large cap Europe, which are the light gray and the dark gray, are quite the same. Only small caps were a little bit higher than the larger capitalizations. Okay, so what happened in the portfolio? What is the portfolio? What are the characteristics of my portfolio? Well, it's normally a concentrated portfolio consisting of approximately 45 to 15 individual investments. At the moment, I got 41 companies in the portfolio. Market caps for the initial investment is between 300 million and 7.5 billion of euros. We're looking for these quality companies that I already mentioned with strong competitive advantages. We're looking for business models that we understand, and the turnover is quite low. So this 20% was last year, where there were more opportunities in March when markets came down. So the turnover last year was 23%, but normally we are around 10 to 12% in turnover. What are the companies that we look at? What is the focus? Well, we're looking for structural growth, I already mentioned. We're looking for innovation, for productivity enhancement for their customers, and also cost advantage for these companies if they are big enough to profit from economies of scale. As François already mentioned in the introduction, the portfolio deviates strongly from European market structure. This comes from the fact that in some of these sectors we do not find any candidates, like energy or telcos of banks, for example. It's not that we are dogmatic against these sectors, but with our methodology, we do not find any candidates. So, for example, in telecoms, there's no differentiation power for the telco operators. If you have your telco plan at Orange, it's quite the same as for France Telecom. The only possibility to differentiate from their competitors is by cutting prices, and therefore you have no pricing power, no retention power for the clients. So therefore, we do not find any candidates in there. And for banks, for example, the reason is there are too many regulations in place. The balance sheet is difficult to understand, and they are dependent on interest rates, which you can barely affect. So therefore, there's no real candidate for us in these sectors. That's probably that's all I have to say about the characteristics of the portfolio. And now you can see the top 15 of the portfolio. Sorry, I have 42 companies in portfolio. Sorry, wrong number in my head. The portfolio now, the top 15 hasn't changed much over the last 6 months from the last Bright Talk that we had in April. Top 5 is nearly unchanged, with all with the same companies there for a couple of semesters, almost years now for some companies. Investment theses of these companies are quite strong. Not I think beginning of the week, Boris Johnson announced, for example, Nieuwe Industrie, which produces heat pumps, which is now a more sustainable way to heat heat in your house. Now Boris Johnson just announced that they will support every new heat pump installation in the UK with £5,000. So again, it's positive news for this company, even if the share price has already doubled since almost doubled since the beginning of the year. There's still a huge potential for this company because heat pumps are still not very highly penetrated in Europe, and governments are pushing more and more to this form of heating. So therefore, there's no reason now to get more pessimistic on these companies. The same for Carl Zeiss Meditec, for example, still top-notch German producer of ophthalmic devices. So also there will be more and more surgery, more and more interventions in their patients, with more people living on the earth, with more people getting older, having problems with their eyes. So also there, the long-term drivers are fully in place. The same for Amplifon, which is active in the distribution of hearing aids. So they are the largest retailer of hearing aids. Hearing aids getting smaller and smaller, so people will be more willing to put an hearing aid in their ears if they do not hear well enough again. So also there, with older population and with penetration into other geographies like Asia, where hearing aids are very, very are not at all represented at all. So also there we got a strong drive over the long term. Virbac, one of the 7 or 6 biggest producer of animal healthcare in the world, with the COVID crisis last year, where more and more people bought in domestic animals. So their products have huge demand for this year. They already raised their guidance 3 times this year. So also their long-term drivers are intact. And yeah, for all the companies in the portfolio, long-term drivers are in place. Only the last two months we suffered a little bit in performance-wise for these names, because these are these defensive quality growth plays which were just not in favor of over the last months. But in the long term, I'm not worried at all in any of these investment thesis. So I still stick to these companies. Investment thesis is strong, competitive advantage are there. They are well oriented to profit from the next year. So therefore, I had no urge to change anything in this top 10, just to fit a little bit more the market. So we stick to our strategy. We did not change our investment approach. So therefore, they are the same companies in top 10 that have been there for the last months. Okay, so what is the sector allocation of the fund? As you can see, we strongly deviate from the index. As I mentioned, I have an overview in industrials, healthcare, and information technologies, as well as in consumer staples. But when you don't have any energy names or financials in portfolio, utilities or telcos, of course you are completely underweight of these sectors. And cash, I got 3%, which is the quite normal percentage of cash that I have in my portfolio. On the country allocation, you can see that I've strongly outweighing Italy and Germany, and somewhat Sweden and Switzerland, and strongly underweight United Kingdom. As already said in April, it's not that I am against United Kingdom, but with Brexit over the last 5 years, that we had this whole thematic always on the market with deal, no deal, deal, no deal. So I had no clear view on when the deal comes through and what will the deal look like. So therefore, just after Brexit, the months after Brexit, when there was a little bit more turbulences on the UK market, the stocks that we had in portfolio were mostly exporters, so they profited from a weaker pound sterling, and therefore valuation of these companies got quite expensive at the time, and we sold our investment, because at the time of Brexit we were equally weighted to the United Kingdom as the index. And then afterwards, the domestic players didn't had a clear view. We didn't know how will the next semesters look like for these companies, and the exporters were too expensive to buy. So therefore, there were no new candidates coming through for us to invest in the UK. But now with having a deal, we know exactly what will coming through. We're looking again more precisely on the UK market. So it's not that we ignore this market, but now it's time to relook at the market. And on the market cap allocation, as you can see, we have a small bias to the smaller capitalization compared to the index. That's because we have interesting candidates also in the smaller names, and therefore we are a little bit overweight the category of 2.5 billion to 10 billion compared to the index. Okay, what has happened in the last 6 months? There was one disposal, Rita. It's a Swiss company which produces spinning machines for the textile industry. Why did I sell it? Valuation reasons. The stock was up 100% for year to date, and therefore I took the opportunity to sell the investment, because the valuation was too expensive. That was the reason, because I sold it, not because the investment thesis was bad, but purely valuation reason. On the additions, there was no new company bought. There were just some major increases. It was Sopasteria, a French software company, AAK, a Swedish natural fat producer, Netcompany, a Swedish technology consultancy company, and Fevertree, the British tonic producer, which produces tonics mainly used for your gin tonic, for example. That were the major transactions done in the last 6 months. So performance review, what has happened to the fund, which were the top 5 contributors, where as you can see it was the top 5. These 5 companies had a very nice stock market performance over the last 9 months. So therefore, it was highly contributing to the performance. And the bottom 5 contributors, therefore CompuGroup, Mycronic, Fagron, Ströer, and Ontex. Nevertheless, Ontex is no longer in the portfolio, so I sold that at the beginning of the year. And the other companies, they were mostly players that had a very, very good year 2020, and this year people were a little bit more reluctant on these stocks because they said, they had a good year last year, so therefore retaining profit, and that's the main reason why there was no big accident in one of these names. Maybe Fagron, you can say, with more lockdowns and people not going as much to the doctor's offices, they suffered a little bit more, but still investment thesis on the long term is in place, so therefore no urge to sell this company. And on sector specifically, on the sector allocation, positive for the fund was overweight in industrials and underweight in utilities. Negative was mainly due to the last months, the underweight in energy and financials. And then you can see year to date, I'm still a little bit in front of the index. As I mentioned at the beginning of my webcast, beginning of the year was more difficult for us when these back to normal stocks outperformed largely the market and also these quality names that we were mainly invested in. You can see I was quite behind the index, and then with more and more lockdowns coming again, I highly profited and took over in performance-wise, and with the highest outperformance I had at the beginning of September, and then with this short increase in inflation risk and in energy prices and in back to normal again, I lost some of this outperformance, but still in front of the market, and hope that I can defend my outperformance until the end of the year. Okay, that's now the performance since I'm managing the fund now from 1st of April 2018, compared to the index and compared to my peer group. So you can see I'm still in front of the markets, which is mainly due to the fact that last year, when markets were dramatically down, we significantly outperformed the peer group and the market. And then we started from a higher base, and with the strong quality growth value that we have seen from May to July last year, was quite positive for the fund, and therefore can still manage to be in front of my peers and the index. Okay, so that was it from my side. Hope that this short overview helped to a little bit better understand what happened over the last month. And if you have any questions, I'm more than happy to respond. And even if you have no question for the moment, you can always send me the questions. Always send questions to BLI, and I will come back to you afterwards. Thank you very much.
Thank you, Tom. Well, you just said what I wanted to say. I do not see any questions coming in the chat at the moment. If you want to ask something to Tom, just do it right now. We can still answer to them. And as Tom said, your sales representatives are always available to take your questions, and they will liaise with us. So Tom can give you a relevant answer. Well, I do not see any questions coming now, so I think we can close the call.
Perfect.
I would like to thank you all for attending this presentation. And thank you very much, Tom, for your time and your explanations. I wish you all a good end of week. As I said in the introduction, we will publish a summary of the call in English, but also in French. Have a nice day, and goodbye.
Goodbye. Thank you very much. Have a nice day.